Have you ever heard the saying, buy when there is blood in the streets? Mullen Automotive might just be giving out this high-risk buy signal while it is at its 52-week low. In today's video, we will dive into the potential future outlook for MULN stock. Make sure to stay until the end to find out everything that you need to know. Mullen Automotive Nasdaq, MULN, an EV manufacturer based in California, is currently experiencing both positive and negative developments. However, it's essential to note that MULN stock is at a critical point, with $1 being a crucial level that investors must keep in mind as a delisting could occur in 2023. Additionally, there are other issues that potential investors should be aware of before considering buying the dip. While there are some positive updates regarding Mullen Automotive, including a partnership with Rapid Response Defense Systems to supply cargo vans to the U.S. government and the introduction of 2 new commercial EVs at Work Truck Week 2023 in Indiana, it's important to note that the stock's performance has not reflected these developments. Despite these positive developments, sellers currently have the upper hand, and Mullen's investors should not anticipate a quick recovery. What's happening with MULN stock? Mullen's stock was trading at $3 just a year ago, but it has been struggling and trading below $1 since last summer, and has now fallen to a mere 10 cents today on the 27th. The Securities and Exchange Commission has recently added the stock to the short sale restriction list, presumably to discourage bear raids on the stock. In addition to the stock's poor performance, Mullen Automotive stakeholders have other concerns to address. The company's accounting firm has resigned, and Drawbridge Investments and DBI Lease Buyback Servicing have lodged a legal complaint against Mullen Automotive in a New York court. The lawsuit filed by Drawbridge Investments and DBI Lease Buyback Servicing against Mullen Automotive is complex and centers around the delivery, or potential lack thereof, Series E preferred stock. Regardless, Mullen Automotive may be facing a costly and prolonged legal battle as a result of this complaint. A reverse stock split is likely for Mullen Automotive. Mullen Automotive is dealing with other concerns, one of which is the worsening of its bottom-line performance. The company's net loss attributable to common shareholders surged by 142% year-over-year to $376.9 million in the first quarter of fiscal year 2023, which is a cause for concern. Mullen Automotive's shareholders are currently preoccupied with the looming risk of a delisting from the Nasdaq exchange. The automaker has reportedly received a non-compliance warning from the Nasdaq exchange due to its stock closing below $1 for 30 consecutive business days, which is the cause of this concern. Fortunately, Mullen Automotive has received a 180-day extension from the Nasdaq exchange, which allows the company more time to adhere to the exchange's minimum bid price rule. However, given that the stock was recently trading at 14 cents, achieving and maintaining a share price above $1 may prove to be a difficult challenge. It's highly likely that Mullen Automotive will opt for a reverse stock split as a solution to their problem. This is a popular approach used by exchange-listed companies that face similar issues. However, a reverse stock split is not a long-term solution and will not enhance the value of MULN stock for its shareholders. So, should you buy MULN stock at a 52-week low? While the principles of buy low, sell high and buy when there's blood in the streets hold some truth, investing in Mullen Automotive at this point could turn out to be a costly error. Despite MULN stock trading near its 52-week low, it should not be considered a bargain since there is a possibility of the stock being delisted this year. Furthermore, even if Mullen Automotive decides to enact a reverse share split, it will not address the company's legal and financial issues. It would not be wise to employ a buy-the-dip strategy at this point with Mullen Automotive, given the multitude of problems the company is facing. It is challenging for financial traders to take a share position with confidence in 2023. Thank you for watching. Make sure to like and subscribe to stay updated with everything that you need to know about Mullen Automotive.